Hello everyone, how are you? Yeah, I'm Dr. Labib from Dr. Labib's Academy. Again, I am back with one of the questions related to F7 ACCA F7 financial reporting. It is a 20 marks question, and we will have calculations, a pure calculations question, 100% calculation, as people are asking, requesting me to do something on the calculations. I kindly request you to see this video till the end. You will have a complete comprehensive understanding. Share it, like it, subscribe it, and press bell icon so that whenever I'm going to post new videos, definitely you will get notification. The only purpose of this is to reach out the aspirants of ACCA as much as possible within the network. So just subscribe it, share it among your friends and among the students community, among the groups of ACCA, so that it will be more helpful. Any comments, any suggestions, you are pleased to post it on the comment section, and subsequently it will be taken into consideration immediately. So thank you so much. Let's start. With respect to financial reporting, there is one question is there, March, June. Yeah, there is one question is there related to March and June, Haverford. They gave you the trial balance, fine, and they gave so many adjustments, 1 2 3 4 5. Okay, I will come back to this slowly, 1 second. And what is the requirements? The first thing, that this is the way we have to approach. We have to approach very scientifically, very technically. What they are asking us: calculated the adjusted profit for Harvard for the year 31st December. It is for 6 marks. Prepare a statement of changes in equity for Haverford. It is for 6 marks. Prepare the statement of financial position for Harvard. It is for how many marks? 8 marks. Total is for 20 marks. We should have a very sound understanding about the financial statements and how best we can deal with. See here what they are doing. Now come back to the question as such. During the reading time, okay, during the reading time, just go through little bit quickly what they are saying. They have given the trial balance, fine, okay, we'll take that one subsequently. The following are the relevant notes are relevant on what they have done. January 1st, they have issued 80,104% convertible bonds, loan notes, that can be converted into equity shares on when? It can be converted into equity shares after 3 years. Yeah? January 1st, 2007, 2008, 2009. At the end of 3 years. Yeah? At the end of 3 years, or redeemed at par on the same date. An equivalent loan without the conversion rights would be required at how much? 6%. They are talking in terms of interest is payable annually in arrears. Means at the end of each year. The annual payment has been included in financial cost of the year. You can refer my lecture theoretical videos with respect to financial instruments. Okay, you can refer the theoretical videos. Already have posted it. See, whenever you are covering the questions, make it sure that please refer the theoretical videos. Then you come back to the question. It will be very easy for you to have a understanding. You will not find any difficulty. That will be payable annually in arrears. The annual payment has been included in the finance cost for the year. The present value they have given you at the rate of 4%, at the rate of 6%. Definitely, I don't think so. We need 4%. We need 6%. Is it? Because it has been mentioned what? It has been mentioned as 6%. Okay, we have to take at 6%. Fine. They will give, no problem. We'll take that. We'll do first. See, I have given you space here for each adjustment. First, I will do working here, and subsequently in the end we are going to prepare the all three statements. During the year entered contract, there is a contract here, entered into a contract to construct an asset of a customer, performance obligation over the time. I think it is IFRS 15, revenue, contract from revenues. Contract from revenues. 1 minute, I will check. Okay, contract from yeah, IFRS 15, revenue from contracts from the customers. Revenue from the contracts from the customers. Okay. IFRS 15, revenue from contracts customers. During the year, they have entered a contract to construct an asset from the customer, satisfying the performance obligation over time. The contract has a total price of how much? 14 million. There is a cost to date of 1.9, and which has been included in the trial balance, and cost to complete is how much? 7.1 million. At 31st December, the contract is estimated to be 40% complete, and they have received how much? 1.4 million. Okay, we will take this into consideration while doing this adjustment. Again, next, I have given you space. I will do the things here while first I'll do workings here, then we'll go back. Harvard made a bonus issue which has not been recorded in the above balance. They intend to utilize the share premium as far as possible, means the maximum share premium. Is it? The maximum amount of share premium. Is it? The maximum amount of share premium given in the trial balance while recording the bonus issue as such. Okay. Next, Haverford has property has been revalued upwards, leading to a balance of revaluation surplus. The property had a remaining life of 25 years. As on 31st December, the property will be valued to 16 million. We'll see how much is what is the value and how it has, what is the carrying amount and what is the revaluation. No entries has been recorded to account for the current year depreciation, the property revaluation as on 2007. No entries have yet been made to account for the current year depreciation. Means we have to calculate current year depreciation. Haverford company does not make an annual transfer for revaluation surplus in respect of excess depreciation. Thus they will not make any annual transfers if there is any excess depreciation. Okay, the last one is, this is the last one. It has been discovered that inventory totaling 13 million has been omitted. Okay, we have to add back. Right? We have to add back this amount. We have to add back this amount to the inventory, and from the final inventory count in the above trial balance. Okay. Next, they gave you this thing. What we have to do with this information? We have to take the adjusted profit and loss account, statement of changes in equity and financial position. Okay, 6, 6, 8, 20 marks. Very simple, very easy. You have to plan it. Okay, that's the most important thing. We should see. We have to be very, very precisely focused what we are doing. Okay. Now, coming back to this, Okay, they have given us what? They gave us the, where is that? Yeah. Here, see the things. They gave us 4% convertible loans. How much they gave it? 4% convertible loans, 8,000. Okay, this is what this is related to note 1. This is related to note 1 as such. Okay, come, we will take that into, we will do the here workings only, is it? Now, when we do the things, what we have to do, I'm talking about working note 1, fine? I'm doing the things here only. What? Convertible loan notes. The convertible loan notes as such. Now we have to calculate what is the present values. Is that what is the present values at as with respect to this? How much they say it is? Loan notes are how much? Loan notes are 4%. Fine, 4% convertible loans. 4% convertible loans. Fine. Next, we'll do this is what particulars payment. You have the discount rate. They are giving 4% coupon, is it? That 4% is the coupon amount. And what is the present values? Now, what is it? It is from, this is for 2007, 2008 and 2009. Okay. Now 2000, how much is there? It is 80,000. Is it 80,000? This is the numbers, is it? 80,000 into value is how much? Value is 100. It comes to how much? It comes to 1, 2, 3, 4, 5, 6. 2, 3, 4, 5, 6. It comes to 8 million. Fine. It comes to how much? It comes to 8 million. Coupon is how much? Coupon is 4%. Is it? Coupon is means what is the interest? Interest is at the rate of 4%. Okay. Means how much? 8 million into 0.04. It comes to how much? It comes to 320. Okay. Now, how much is the payment at the rate of what? At the rate of 4%. At the rate of 4%. Fine. This is where it is related to this one. How much is there? You can take it in thousands. Okay. You can take it in thousands. In thousands. Anything is there, just post it on your comment section. You need any specific question to be answered, just send it on my email and I'll get back to you with the solution. The only purpose is you have to be, how much is there? If you are taking into thousands, it comes to how much? 320. Discounted at the rate of how much? At the rate of 6% present value. Fine. Discounted at the rate of 6%. It comes to how much? 0.943. Yeah, 0.943. This is column 1, this is column 2, this is column 3, and column 4 is nothing but 2 times 3. Okay, column 4 is 2 times 3. It comes to how much? 302. It comes to how much? Again, it is going to be 320. What is the 0.890? 320 times 0.890. It comes to how much? It comes to 285. Now, what is in the third year? What happens? You will have 8 million. Is it? You will have 8 million plus you will have how much? 320,000. Is it the coupon? It comes to how much? 8320. 8320 into 0.840. 0.840. 320 times 1 million. 320 times 0.840. It comes to 6,989. This is in thousands. Okay, This is in thousands. How much is there? 2 plus 5, 7, 7 is 6, 6, 1, 7, and this is 1, 5, and 7, 5, 7, 6. Is it 7, 5, 7, 6? How much is that? We have to, there is a difference. Is it? This is the present value of the bonds. Is it? How much is the difference? Write down. How much is the full amount? Full amount is how much? Full amount is 8 million. Is it right? Full amount is how much? 8 million. 800,000. Okay. 8. Fine. What is the present value? Present values are how much? This is the present values. Okay. Present minus present value is how much? Present value is 7576. Difference is how much? Difference is 424 in thousands. Right? Now we have to make an adjustment entry for that. Is that what will happen? Your liability will increase. The whatever the difference, it is constitute going to be the equity as such. When the liability, see what happens? One side the liability will decrease. Is it? The bond liability will decrease. Another side the equity component will increase. What we have to do? Debit will be the liability. Debit will be the liability. How much is there? 424. Okay. And credit will be what? Credit will be the equity. Fine. This is what. Now, how much is the liability? Liability is how much? The the convertible loan liabilities is 7576. They said very clearly that the annual payment has been included in the finance cost. Okay, the annual payment has been, interest is paid annually in arrears. Interest is paid annually in arrears, 31st of December each year. Is it? 31st of December each year. Means what we have to do, we see that how much we have to amortize the cost. Liability amortization is nothing but decreasing the at the rate of effective rate of interest. Right? Now what is the liability to held to be amortized at amortized cost. How much is this? 7576. How much is this? 7576. You have the balance. 757. What is the rate of interest we are paying? Rate of interest we are paying at the rate of 6%. The present values. Fine. Now the payment coupon rate is how much? Coupon rate is at the rate of 4%. Coupon is it? Balance carry forward. This is balance brought forward. This is the balance. How much is there at the end of the third year? At the end of the third year is, this is also in thousands. Okay, this is also in thousands. How much is there? 7576. Okay, at the rate of 6%. Is it? At the rate of 6%. Just I am writing with, is it? Times 0.06. 0.06. How much will come? 7576 into 0.0, it comes to how much? 455. How much is the coupon? It is 4% on 8 million. 4% on 8 million, it comes to how much? 320. Fine. Therefore, see, again I will do the same thing. Column 1, column 2, column 3, column 4 equal to 2, column 2 minus column 3 as such. It comes to how much? 151, 135. This is the finance cost. This is the expenses. Right? Whenever they debit all as per nominal account, debit all expenses and losses, credit all incomes and gains. If that is the case, what we have to do, you have to write a general entry. General entry is important. Yeah, general entry is important. What they say, debit. Debit will be how much? Debit will be the finance cost. Only we have to take the difference. Okay, debit we have to take the difference. How much is there? 135 in thousands. Credit will be what? Credit, it is a liability, we have to pay it. Yeah, liability, how much is there? 130. This is what we have to do. What we have done, very easy. First we have to calculate the present values, taking into consideration the coupon rate and the discount rate. Then we have to take the difference between the full amount and the present values. It is going to be constituted as an equity. Yeah, it is going to be constituted as equity. Again, we have to write what? We have to write the general entry. Here also we have to make it sure. Yeah. This is the workings for note 1. Okay, this is the working for note 1. Okay, now next this is how I will do in this way. For every working I will do in the same place, so that you will find it easy to understand. Next, what they say that entered into a contract to construct an asset for a customer, you are satisfying performance obligation over time. The contract has a total price of 14 million. Cost to date is 1.9, which has been included in the trial balance. Cost to complete is 7.1. December, they estimated that how much? It has been estimated 40% completion. They have received 1.4 million, and this has been shown in the trial balance. Just we will see what are the information that has been given in the trial balance regarding the contract. See the thing they have said. It is note 2. Note 2. They have received 1.4. They are talking in terms of cost incurred on contract to date is 1,900. Anything is there with respect to contracts? No. The same information is given. Yeah. Now this IFRS 15. Okay. Please go through the lecture before you start doing the things here. Okay. Again, I will do the workings here only. Working 2. Now contract with customer. Overall contract asset. Overall contract. What is the price of the contract? Price of the contract is how much? The total price. Total price is how much? 14 million. Here 14 million. Fine. 14 million. 14 million. We can take it in thousands only. Okay, because it has been okay, fine. Okay, 14 million. Or you can put like this. Yeah, you can put like this. You can put 14 in thousands. Is it in thousands? Now, total price is how much? Now, what we have to do, we have to take into consideration cost to date. How much they have said cost to date is how much? 1.9. Okay, 1.9. Next, cost to complete. We want to know what is the how much is the things added. The cost to complete. Cost to complete is how much? Cost to complete is 7.1. How much is the difference? The difference is 5,000. Right? The difference is how much? 5,000. Keep it like that only. Okay. Next, how much is the progress they have done? How much the progress they have done? Their progress they have done at the rate of 40%. Fine. They have protected now. How much we have to show in the statement of profit and loss. Statement of we have to take 40% only. Revenue is how much? Revenue is 14 million. Revenue is 14 million into 40%. Revenue is 14 million into 40%. How much? 5,600. Next, cost of sales. Is it? Cost of sales. How much is the cost of sales? See the thing here. What we have to do? We have to take into consideration the total price. The total price is how much? The total price is 14,000, and we have calculated this the profit that has been happened. Is it profit? How much? It is 5,000. If we take into consideration, it comes to how much? It comes to how much? 9,000 times 40%. 9,000 times 40%. How much will come? It will come to 3,600. This is as simple as that. Profit to date. Okay, profit to date as such. Next, how we have to show in the statement of this amount we are going to show it in the statement of profit and loss. In the statement of financial position, the cost incurred. Is it cost incurred on contract to date. It is given in the trial balance. Is it? How much is there? 1900. Is it? How much is we have calculated? Statement of statement of profit and loss account. Is it? How much we have added? We have calculated here. This value. It comes to how much? 2,000. Fine. Next, how much we have received cash? How much we have received cash? Cash received is how much? 1.4. Is it right? 1.4. This is the cash received. Okay. Next, what is the difference? Difference is 3.9, 2,500. It is going to be receivables. It is going to be asset as a current asset. The current assets. Fine. Is it okay? No. This is what. How much you have to record it as a revenue? You have to record it as a revenue. This is the revenue. This is the revenue. Yeah, this is the revenue. 5,006.5.6. 3.6 is the cost of sales. Yeah, 3.6 is the cost of sales. How much you are going to have? Profit is how much? Profit is 2 million. We are taking this into thousands. Okay, don't get confused on this. It is in thousands. This is what? This is the one related to the contract to IFRS 15. That concept has been implemented. Okay. Now again, just a revision, a small recap. We have taken total price, cost to date, cost to complete, overall profit we'll get. Then we have the statement of profit and loss account. We'll take revenue and we'll take cost to sales, cost of sales, 40% of that. Then how much we have to show it in the profit and loss account, and how much we have to show in the financial statement of financial position. Next, they said that it's very simple. Is that they said that they are issuing how much? one for 5 bonus, one bonus for made a 1 for 5 bonus issue which has not been yet recorded in the trial balance. They going to use share premium. How many shares are there? Shares are how many? 20 in thousands. Okay, 20,000. How much is there? Just see the things. Ordinary shares are how much? 20. I can say we can say 20 million. Okay. Now they are issuing for 1 for 5 bonus issue. It will increase. Is it right? It will increase. How it is going to be worked out? See how many shares for 20,000 in is it for 20,000 one bonus issue for 5 how many 20 divided by 5 into 1 it comes to how much in thousands is it in thousands. Is it? Now what they are saying, they are saying that they will use the share premium. Is it? How much they use the share? They use the share premium to the fullest extent. Is that they use the share premium to the fullest extent. How much is the share premium? Share premium is how much? They have the share premium. Is it right? They have the share premium. How much is the share premium? They use 3,000. Okay. The rest they will use from the retained earnings. Fine. They use it from the retained earnings. Now, how much they use from the share premium? They use share premium for how much? 3. Is it right? And the how much the rest they are using from where? They are using it from the retained earnings. How much they are using retained earnings? 100,000. Is it right? They are using from the retained earnings. Next, again what we have to do? We have to write a general entry. We have to write the general. We are writing off share premium. Share premium is a credit. It is a liability. It is a credit balance. In order to make it cancel it, we have to debit the share premium account. We have to debit the share premium account. How much share premium account? 3 million. See, in the similar way, retained earnings also. Is it? We are reducing. Is it? We are reducing retained earnings. How much? 1 million. Is it? And what happened how we are going to compensate it? We are increasing the share capital because we are issuing the bonus issue. How much is there? 4. Fine. Very important. Are you clear about it? Very simple adjustment. Now you will have more clarity. I'm going to do some innovative way so that you can understand the best of the best possible way as such. Fine. Next, coming back to the next one. What they say, they are talking about the Haverford property has previously revalued. What is the property, plant and equipment? Property, plant and equipment is how much? 18,000. Is it right? You see the thing. It has been given here. In the first one, how much is there? It is 18,000. Fine. With this 18,000, we have to do all the relevant adjustments. Okay, all the relevant adjustments as such. Now, fine. It is 18,000. How much they have depreciation? Is it depreciation per annum? Okay, depreciation per annum. 18,000 divided by 25 years. Okay, 18,000 divided by 25 years, it comes to how much? 18,000 divided by 25. It comes to how much? It comes to 720. Yeah, 720 in thousands. Okay, 720. That's all. 720. 720. That is it is in thousands. Okay. Now. Now what is the carrying amount? Carrying amount is what is What is the price? What is the value? Value is going to be 18,000 minus depreciation is going to be 720. Carrying amount is going to be 287.1. Is it right? 287.1. For this we have to depreciation, is it? For general entry for current year depreciation, they said very clearly no entries have been accounted for current year depreciation, is it? No entry has been accounted for current year depreciation charge. Now what will happen? Debit will be what? Debit will be the profit and loss account, is it? Debit will be the draft profit and loss account. Credit will be what? Credit will be the property, plant property. Okay, credit will be the property. How much is there? It is 720,000 in thousands. Okay, 720,000. Fine. Now next yes, what we have to do? We have to know how much is the carrying amount. Fine. Carrying amount is how much? This is the carrying amount as on at the end of the year, is it? Carrying amount at the end of the year, yeah? Carrying amount at the end of the year, is it how much? 17,280 minus revaluation amount minus revaluation valuation amount. Okay, 16,000. How much is the difference? We don't say difference is how much? 1,280. Is it? Difference is how much? 1,280. This is revaluation loss. This is revaluation loss. Okay. For this, what they say, what they have mentioned here, what they have mentioned, Haverford does not make any transfers. Is it? No entries has been made on the account depreciation charge, the property revaluation. However, does not make any annual transfer from the revaluation surplus in respect of excess depreciation. Fine. Somewhere it has been 1 minute. Yes. Okay. Fine. Now, how much is the revaluation? See how much is the revaluation amount they have given in the question. They have given the question is how much? It is given as 800. Is it? Revaluation is how much? 800,000. Fine. 800,000. Now total revaluation loss is how much? Total revaluation loss. Total revaluation loss is how much? 1,280. From revaluation surplus is how much? Revaluation surplus is it given in trial balance. How much? 800. Is it right? How much is there? 480. Is it? This has to be debited to whom? This has to be debited to draft profit and loss account. Fine. How much is the value of the asset is decreasing? 1,020. Again, you have to write the journal entry. See, if you are perfect in journal entries, you are perfect everywhere. As simple as that. How much is the debit? Debit will be how much? Debit will be revaluation surplus. We are reducing the revaluation surplus. Is that total amount? Is that revaluation surplus how much? 800. Next, debit will be how much? Draft profit and loss account. Is that how much? 480. Credit will be how much? Credit will be the property. How much? 1,280. Okay, this much we have to do with respect to the point number 4. Fine. Next, what is point number 5? Point number 5 very easy. They have said that it has to be totaling how much? 390 omitted from the final inventory, the about trial balance. Okay, when it has been about, what we have to, we see if we have to increase the inventory, is right? Inventory is an asset. To increase the asset, we have to make a debit inventory, is it? Debit inventory will be how much? 390, is it? 390 thousands. Okay, 390 thousands. And credit will be what? The credit will be draft profit and loss account. Is that as simple as that? The credit will be what? See what I will tell you. I will say some. I will show you a small explanation. Is it right? Two options. Option 1 and option 2. Okay, how it will affect profits. Okay, how it will affect profit. You have the sales. Take sales. Is that? Take sales as 1,000. This is only an example. Okay, cost of sales. Cost of sales is opening inventory plus purchases minus closing inventory. Fine. Closing inventory. Now, what will happen? Assume that we have they have omitted 390. Okay, we have omitted. Assume it is opening inventory is 100, purchases is 200, closing inventory is 0. Okay, closing inventory we have omitted. How much is the cost of sales? Is 300. Gross profit is how much? 700. Fine. Now, what happens? Opening inventory is what? Opening inventory is 100. Purchases is how much? Purchase is 200. Take closing inventory. Closing inventory will be how much? 390. Okay. How much will get? How much will get? 300. Fine. No, for 1 minute. We will take here. We'll take here 300. Okay. We'll take here 300. It comes to how much? We'll say it is going to be 500. The profit will be how much? 500. Is here we'll also make it as a 300. 300 plus 200, 500. 500 minus 390. It comes to how much? 110. Profit will be how much? Profit will be 890. Profit is increasing. Is it right? Profit is increasing. Because the profit here increasing while adding back the inventory level, that is the reason we are crediting the profit and loss account. This is the reason why we are crediting the profit and loss account. This is the example which has been there for your justification. You should not have any doubt. Okay, these are the 5 different adjustments. Now come back to the things in the beginning. Okay, we will make sure that how it is going to be worked. Now we are not supposed to do anything else, is it? We have just want to make the statement of adjustments. Fine. Next, the first one. Yeah? Adjustments to Haverford company's profit for the year ended 31/12/2007. Fine. Next, how much is the draft profit? They are given us the draft profit. Where is the draft profit? Draft profit is where? Draft profit is here. Yeah, draft profit is how much? Draft profit is 2,250. Yeah, draft profit is, this is also in thousands. Okay, this is also in thousands. 2,250. Fine. Next, we have to pay interest. Is it right? We have to pay interest as per the for the finance cost 135. Is it right? We have to pay the finance convertible loans. That convertible loan notes finance cost working 1, how much? 135 minus. Okay, next you have a contract revenue is there. Is that contract revenue? Is a working note 2. Here we have done 40% of 14,600. Is that 40% of how much? 5,600. We have contract cost to sales. Again it is in working 2. Again how much is there? 3,600. Fine. I will show it again where we have done here. See the thing, 3,600, 5,600 and 3,600. Working note 2. Next, we have calculated depreciation. We have calculated depreciation in working 4. How much we are current year? How much is the depreciation? 720. It's very simple. Next, we have talked about what? We have talked about a property. Property. The decrease in value. Property. Revaluation loss. Revaluation loss. It is going to be called as a impairment. How much is there? 480. Next, we have the closing inventory. We have added closing inventory. I gave you when it has been added, what will happen? Profit will increase. How much is there? 390. How much you will get? 2250 minus 135 plus 5600 minus 3600 minus 720 minus 480 plus 390 comes to how much? It comes to 3305. Okay, it comes to how much? 33. Now, second one is what? Second one is statement of changes in equity. For the year ended 31st December 2007. Particulars, share capital, other components of equity. OC means other components of equity. You have retained earnings, you have revaluation surplus, and you have the balance brought forward here. Balance brought forward 1/2007. How much is the equity? 20,000 is the equity. Other components of equity is how much? Other component of equity. Is that other component of equity? They give you 3,000. Is that other component of equity is 3,000. Retained earnings are how much? 6,270. Revaluation surplus is how much? 800. Here nothing is there. Okay. Next, what we have to do? Here we calculated profit. Is it right? Current year profit. How much is the current year profit? 3305. Fine. 3305. You have a revaluation loss. How much is the revaluation loss? Revaluation loss is 800. We have passed general entry. Okay. We have issued bonus issue. Is it bonus issue? Working 1. How much we have issued shares? To the extent of 4,000. From where we have extent for 4,000, we have taken 3,000 from the other components of equity. We have taken 1,000 from the retained earnings. Is it? We have taken the things. Fine. We have passed the general entry. Fine. Next, you have convertible loan notes. Is it right? Convertible loan notes. How much is there? The options is that you have the option to convert it into equity. How much is there? 424. They have paid dividends. Fine, it is given in the trial balance. How much they have paid dividends? They have paid dividends where it is been given. It has been given here. How much? The 3620. How much they paid? 3620. Definitely they will pay it from where? They will pay it from retained earnings. If you put the things, you will get the closing balance. How much is it? 24,000. Here it comes to 0. Here it comes to how much? 4955. It has come to 0. It comes to 424. This is for how many marks? This is for 6 marks. Okay. Next. That's all. As simple as that. It's not that much difficult as such. Fine. Next, the last one is what? The C is statement of financial position. Any doubt anywhere, just you can post it on the comments. Like it, share it, subscribe it. Okay, that's very important. The more you share it, other people will get benefit. The purpose is that only. 31/12/2007. Fine. 31/12/2007. It is also in thousands. Fine. Next, first you have to take assets. Right? How much is the property? How much is the property we have done in working 3? Okay. Property is how much? The return down value. Is that the revalued amount? Is that revalued amount? Is how much? For this is what you, the revalued amount is 16,000. Okay, revalued amount is 16,000. Next, you have the current assets. Is that you have the current assets. Fine. In the current assets, inventory is how much? Is that inventory is how much? Inventory is, see how much is the inventory? Inventory is how much they have given the inventory for us. Inventory is how much? 4310. Okay, 4310. 4310 plus 390. Okay, 4,700. Okay, fourth. Next, trade receivables are how much? Trade receivables are how much? Trade receivables how much? 5510. Okay, 5510. Fine. Contract asset we have done. Receivable, is it? Contract asset working 2, is it right? How much is there? You have to receive how much? 2,500. What is the cash amount? Cash amount is 10,320. Total comes to how much? 16,000 plus 4,700. 1 minute, plus 5,510 plus 2,500 plus 3. It comes to how much? It comes to 39,030. This is the total assets. Fine. Now, what are the total liabilities? Okay, what are the equity and liabilities? Equity and liabilities. Examination, you have to be very slow, where you have to plan. First 15 minutes reading time is very important. That you have. Now equity and liability, you take equity share capital. Equity share capital. How much is the equity share capital? 20,000 plus 4,000. Yeah, how much is that? 24,000. Next, you have retained earnings. Yeah, we have to take it from where? We have to take it from the statement of changes in equity. 4955. Okay, 4955. You have to do practically. Okay, in your notes. Fine. Next, convertible options. convertible options. How much is the convertible option? 424. Okay, how much it will come? 24,000, 28, 28, 29, 29. It comes to how much? 29,000. You put here to put this 29,379. Is it? This is going to be a total equity. Is it right? This is going to be a total equity. Next, in non-current liabilities. Non-current liabilities. Yeah, non-current liabilities. So you have convertible loans. Yeah, you have convertible loans. How much is the convertible loans? 7711. We have done in the working notes. Okay, 7711. How we got 7711? 7576 minus 455. Is it minus 455? 177 757576 1 7576 75. 1 minute. I will show you 1 minute. 1 minute. 7576 7576 plus 455 minus 320. Circle 7576 plus 455 minus 320. It comes to 7711. Here it comes to almost 7711. This is the convertible loans and working note 1. Working note 1. Next, what we have to do? You have current liabilities. Is that you have current liabilities? Current liabilities are how much? It has been given in the question. Is it how much is the current liabilities? Current liabilities are how much? 1840. Is it 1840? Current liabilities are how much? 1840. Okay, 1840. 1 minute. 1 minute. Current liabilities 1 minute. is there. And just I want to make it a total before coming to the point. Okay, is that here? Is it right? Current liability is 1840. We have to 4%, 6%. Here in the second one it is 7.1. Current assets, and this is related to share capital. $480. This is related to current assets. $890. This is related to 891. This is related to 890. We didn't have anything on current liabilities. $424, $135, $455. Fine. 1 minute, we'll check it again. We don't have anything here, is it? 43, 661. We have no 1,840. 1,840. It is 2,000, 1,000 cost to income 2,500, 2,500. $1,280 and 390. That's all. Okay. One minute. 24,000 plus 4,955 plus 424, 29,379 plus 7,711 plus 1 29379 plus 7711 plus 1940. Fine. Okay, 1 minute. I will do like this. This is 1840 plus 100. This 100 is a question mark. Okay. It comes to how much? It comes to 1940. If you take the total, 7711 plus 1940 comes to 9651. Total will be how much? Plus 29379. Total equity and liabilities. Okay, this is the way we have to work it out. So what we have done, first we have to do the workings, is it? First I have in the same way from the next session onwards I will do like this only. For every working I will do there. Then you will, once working is over, then we will, whatever the requirements are there, based on the requirements we are going to work it out. Okay, please go through it, revise it, do it on paper again. If first you understand it, then you do it without seeing the session video, and any doubts are there, please let me know. Okay, so thank you so much. Take care. Inshallah, we will come back to it again on with new topic. Best of luck. Like it, share it, and subscribe it. Press bell icon for notifications. Thank you.